Sup, freaks? It's your boy Marty here to introduce this rip of TFTC. I sat down with John Arnold, the John Arnold from 1031, to talk about why Bitcoin is eating the world. Great deep dive into the opportunity that sits before us here in the world of Bitcoin and the companies building out the space and investors who are looking to invest in those companies. I think you guys are going to enjoy it. John is a consummate professional, extremely impressive. I feel very lucky to be working with him at 1031. This rip was brought to you by our good friends at River. River's here, building up Bitcoin infrastructure. They build their own infrastructure. They don't have any third-party dependencies like Prime Trust or Fortress. They built their own wallets. They custody their own Bitcoin in multi-sig. If you buy Bitcoin on River, it is reserved one-to-one in multi-sig cold storage. You can DCA on River. If you dollar cost average, you set it and forget it. You're not going to pay any fees on those buys. You can set limit orders. Maybe you thought the price of Bitcoin was going to dump after the ETF, and you know not to buy the ETF. You need to buy actual Bitcoin. You could have set a limit order below the price of where it was when it launched. You could have set it at like 39,000. That would have been filled. You can do that on River very easily. They also have River Links, which allows you to gift people Bitcoin. It's a fascinating, incredible way to do it. You go in the River app, you create a gift, a link, a River link. You say, hey, I want to give my friend $100 worth of Bitcoin. Then you send them the link. They click the link and they can say, hey, I want to sweep this to my River account if I have it, or any other wallet that I want to. It's the best way to gift Bitcoin. If you're stacking sats, if you're gifting Bitcoin, if you want to set limit orders, go to River. Go to river.com/TFTC. Sign up today. You're going to get $5 worth of Bitcoin. This rip was also brought to you by good friends down the hall, Unchained, also doing it the right way, also building their own infrastructure. What Unchained is doing revolves around multi-sig custody, 2 or 3 multi-sig quorum. It's a collaborative custody model. Their Vault product allows you to hold 2 keys. Unchained holds 1. You can distribute your risk, eliminate single points of failure. Unchained's there to be the second in the 2 or 3 multi-sig quorum if you need them. They also have an IRA product. A lot of people aping into the ETFs. Don't think that's the best idea. You should get access to actual Bitcoin that you can control. And if you want to have an IRA and Bitcoin in your IRA, go to Unchained, transition your IRA into their Bitcoin IRA, and you can hold your own keys. Again, with that 2 or 3 collaborative custody model. So if you're thinking, oh, I want to invest in Bitcoin for my retirement account, I have this IRA, I don't want to liquidate it and then buy Bitcoin, you don't have to. Hit up the concierge team down the hall. Go to unchained.com/consultation. Set up a consultation, learn about their IRA. There's many people doing it. I know many people in my family have done it. They're very happy. They feel secure. They feel happy. The Unchained team is the best in the space at onboarding people. Unchained.com/consultation. Tell them the TFTC sent you. This rip was also brought to you by our good friends at CrowdHealth. In Bitcoin, we're focused on taking sovereignty back. In the monetary perspective at CrowdHealth, it's taking sovereignty back. From a healthcare perspective, typical or health insurance, the industry is notoriously opaque, expensive, impersonal. CrowdHealth is a different model. It's not health insurance. It's crowd-funded healthcare. You pay a monthly fee, you pay a membership fee. You join the CrowdHealth community. If you ever need to go to the doctor, you tell CrowdHealth, hey, I'm going to the doctor. They say, all right, get us a bill. You go to the doctor, you get the bill, you give it to CrowdHealth. They negotiate the price lower. And then you pay the first $500 of that bill, and the rest gets crowdfunded by the CrowdHealth community. They've had 100% of bills paid to date. They can't guarantee that will happen, but the model seems to be working. If you're young, healthy, have a good income, you don't want to pay crazy health insurance premiums. You don't want to pay crazy healthcare costs. Maybe you're unemployed, you're paying Cobra. That's what happened to me. I wasn't unemployed, but I left a company, did not get health insurance, and I was on Cobra, extremely expensive. Ditched Cobra for CrowdHealth. It's way cheaper. Me and my family love it. We've been using it, and it works. It's worked for us. We've used it multiple times throughout the last 2 years since we've been CrowdHealth community members. So go to joincrowdhealth.com/TFTC, sign up today, and you're going to get $99 for the first 6 months of your membership fee. Last but not least, this rip was brought to you by Bitcoin Talent Co. Bitcoin Talent Co. is here to help you find the best talent in the world. If you're a company building out the space, so a lot of the companies we talked about, John and I, in this episode, they need to hire. Some of them are using Bitcoin Talent Go to go hire what they need. It's a Bitcoin recruiting firm built by Bitcoiners for Bitcoiners. They understand Bitcoin. Again, like John and I discussed, they're an inch wide and a mile deep in understanding Bitcoin. So it's not just some recruiting firm that's going to not understand what Bitcoin is and not know the talent to bring to you. They do know, they understand multi-sig, they understand mining, they understand Lightning. They're going to be able to find you the talent. Go to bitcointalent.co, tell them the TFTC sent you, get onboarded with them, get the best talent. You don't need a full-time employee, you need a contract worker. Guess what? They have a flex program that'll allow you to tap into a roster of people who are willing to work for short periods of time, 3 months, 6 months, whatever you need. You need a design sprint, an engineering sprint. You need a part-time CFO. Bitcoin Talent Go can find those people for you. bitcointalent.co. Tell them the TFTC sent you. Wasn't last but not least, also, new sponsor. Been drinking electrolytes to supplement my water, my hydration. Salt of the earth. Go to drink, SOTE, drinksote.com. drinksote.com/TFTC. Check it out. With that TFTC promo code, you'll get 15% off. Enjoy this rip.
You've had a dynamic where money's become freer than free.
If you talk about a Fed just gone nuts, all the central banks going nuts.
So it's all acting like safe haven.
I believe that in a world where central bankers are tripping over themselves to devalue their currency, Bitcoin wins. In the world of fiat currencies, Bitcoin is the victor.
I mean, that's part of the bull case for Bitcoin.
If you're not paying attention, you probably should be.
John Arnold.
Marty Bent. It's an honor.
It's a long time coming, sir. We've been working together for what? 2 years now, almost?
Close to 2 years, yeah.
We're very lucky to have you on our team at 1031. I just want to say that up front.
The feeling's mutual. Very, very bullish on what we're doing. I think it's very unique, and we're just getting started. So I'm excited.
Yeah. Before we jump into what we're here to talk about, which is the fact that Bitcoin is eating the world, you wrote an incredible piece laying out the case for Bitcoin being the largest total addressable market on the planet. But before we do that, are you the real John Arnold? That's the question. I think we need to.
My parents would say yes, but there is a slightly more famous and just slightly wealthier John Arnold out there who happens to be a billionaire. And I guess this quick background on me: I'm a traditional finance refugee. Started in investment banking right out of college. Then went to work at the hedge fund Citadel for several years. And while I was there, got an email from another billionaire by the name of Ken Griffin, asking to talk to me right away. And obviously assumed, as we're all trained to assume, that that's some kind of spam, some kind of phishing attempt. But when I referred it to our IT department, I was assured, no, it's the real Ken Griffin, and you better give him a call. So I gave him a ring, and I believe he was trying to get my opinion on some gala or charity event. And I was unfortunately unable to provide any useful information to him, and hung up the phone, assuming surely I'm about to be fired. Checked in with his secretary to find out that he was actually looking for the John Arnold, the real one, the billionaire, with whom he presumably has some kind of relationship, and not the underling John Arnold, who was a first-year analyst at his firm. So that's my claim to fame at this point, as being the second John Arnold in the world. Well,
the second John Arnold, but for a second there, we were like, oh, Ken's liking my work as an analyst. Am I impressing him?
Generally when you're like 23, 24 and the billionaire CEO of your company wants to talk to you, it typically isn't a good thing. So my first response was not positive, but turned out to just be a mistake, an innocent mistake. So I'll live to fight another day.
Yeah. That's one of the funnier stories that you have in your belt. You have a few of them. That's one of my favorites. But it's a good level setting for the context of this conversation. Obviously, you're with us at 1031. You've come full throttle into the Bitcoin ecosystem, helping back the companies that are building out the infrastructure for a Bitcoin standard. Before we jump into the article and all that, let's talk a little bit more about your background, what you're doing at Citadel, what you're doing before that, what you were focused on, and how that applies to what you're doing now at 1031.
Yeah, for sure. Post-college, like I said, started in investment banking at Goldman. For those that don't know, that's a lot of Excel modeling, building PowerPoint decks, turning comments from senior members of your team at 4 a.m. And just trying to survive and learn the basics of kind of corporate finance. Knew I wanted to be an investor, likely in the public markets, and so recruited for positions at hedge funds. Landed at Citadel, which had me doing a lot of just investment analysis of publicly traded companies. I was on healthcare desks, focused even more specifically on medical technology. And the model of a lot of those modern kind of hedge fund businesses, the big shops, is to have kind of an army of people who are inch wide, mile deep, focused on very particular kind of subsectors and trying to be the axe in those subsectors and just kind of know them better than anyone else in the market. That'll be relevant to kind of the story of what we're doing at 1031, in a second. But I did that, kind of was a junior analyst, worked my way up to some extent, worked on a couple of different desks, always focused on medical technology, providing a lot of the underlying analysis for investment decisions that our desk would make for our positions, usually on very lean teams. So only a few people, typically worked for kind of just one person above me, providing input, analytical input, meeting with management teams, doing channel checks, and just kind of learning as much as I could about the companies in our portfolio. And so kind of built up what I think is a pretty strong muscle on just basic blocking and tackling of corporate finance and investment analysis in a public markets context. But I had always been kind of a big supporter of Austrian economics, even from high school onward. You've talked at length. You just had the episode with Parker Lewis out about how you guys were kind of both formed by the financial crisis in '08. I was also kind of in high school at the time, right around the same age as you, and that caught my attention and made me interested in finance in a big way for the first time, but also interested in kind of what the causes of that crisis were and why suddenly all the smartest guys in the room seemed to not know what was going on, and why we needed to take out untold levels of debt and print untold levels of money, untold for that time, to bail out the system. And so that naturally led me down the Federal Reserve rabbit hole and into kind of Austrian economics and the Mises Institute, and I became a big Ron Paul supporter. And so I'd always kind of had that vein running through kind of my intellectual life, even while I was working in traditional finance jobs. Obviously, as you would imagine, a lot of those principles are not, they're not orthodoxy on your traditional finance desks typically, so didn't necessarily have a lot of opportunity to put those into practice. But over time, kind of working in those jobs, you sense, like, especially if you come to those jobs with the priors of Austrian economics, you can kind of sense that there's something like a little wrong, at least, to say the least. There are kind of strange, like, short-term games being played, and there's kind of less and less focus on fundamental analysis and less and less attention paid to what's a fundamentally justifiable valuation for a company. A lot more focus on just short-termism, quarterly earnings reports, or even weekly, monthly moves in a stock. Focus on others' positioning, and kind of just increasingly trading all stocks as more or less like shitcoins, right? Just like tickers on a screen that have maybe some tenuous link to real economic realities, but like not really that you have to like pay attention to. So kind of went through that career progression with those priors in mind. And you would think that that would have led me to fully grok Bitcoin much sooner, but heard about it for the first time in 2013 in college. I think around the time that Mt. Gox blew up. I knew it was kind of it was popular among libertarians, but it seemed esoteric and scammy, and I thought, nice science project, but probably never going to work. Then my next touch point was while I was working in finance in the 2017 bull run. Got a little more interested then, but still just didn't have the conviction to fully take the plunge. And, obviously you're drinking from a fire hose on, finance desks, and you don't have a lot of time to drill into something that takes 100 plus hours of work to start to get. So that didn't work either. But finally, spring 2020 happened, and that forced me down the rabbit hole. And after a week or two of some real diligent work, it finally clicked that this was indeed the fulfillment of the principles that I had learned from Austrian economics. This was Hayek's sly roundabout way to change the system, the monetary system, for the better, in a totally peaceful, voluntary way. And so from then on, I was hooked. I continued to work my hedge fund jobs for another year plus, just kind of learning as much as I could about Bitcoin, being in the space as much as I could. Much to my wife's chagrin, as I'm sure a lot of Bitcoiners can attest, it becomes kind of the only thing you can talk about or think about. So I went through that period. But to your point about coming from an investing background, around summer 2021, so after being in Bitcoin for a little over a year, kind of just started to have the intuition that if Bitcoin was going to do what I thought it was going to do, and what most of people listening to this probably think it's going to do, there will be a massive kind of wave of demand behind that for companies building applications to make Bitcoin easier to use, to extend its utility to both through retail users and enterprises. And because Bitcoin is money, then there's no industry that it's not going to touch. And we'll get into that more, but that by itself was kind of this intuition that made me start thinking about investing in Bitcoin companies and trying to figure out a way to do that. And right around that time, 1031 popped onto my radar, kind of came out of stealth. And I saw that 1031 was combining traditional finance experience. Some of the two co-founders have experience in private equity and hedge funds. And then they were bringing, you and Matt Odell on, and, you guys were formative in my orange pilling experience, my going down the rabbit hole. And so it just seemed like the perfect kind of shop to go try to build. Just a totally unique opportunity, combining the two things you would need to be a successful investor, right? In the Bitcoin space, which is some traditional finance investing experience and deep Bitcoin knowledge and Bitcoin focus. So I think I slid into Grant's DMs, in like summer, fall 21, and just kind of wouldn't let up until we got on the phone. He and I started talking, and I started doing some work with you guys when I had a chance on the side, and one thing led to another. And spring of 22, I think the day that Terra Luna blew up, I came on full time.
Baptism by fire, baby.
Yeah, exactly. But it was validating too, right? I mean, it's exactly the kind of thing where, a couple of years before, I'd been looking at all the investment in kind of the crypto space broadly and thinking, these things look like perpetual motion machines. There's a ton of noise. Everyone's missing the signal of remaking money of kind of digital bearer value that's absolutely scarce. And, that was one of the things that pulled me to 1031 with, the contrarian viewpoint that you guys were taking. And so I think it was appropriate that basically the day that I joined, we were kind of like vindicated in a very big way, unfortunately, when one of probably the perpetual motion machine of crypto par excellence totally blew up.
Par excellence. No, it's again, for level setting for this conversation, it's so true. I mean, I had a very short stint in traditional finance, about 3 years, which included 2 2 years of college where I was working full time and taking night classes, but it was a different side of traditional finance with managed futures fund. We were fund of funds, index commodity trading advisors. So it wasn't like a long short equity portfolio where we're diving into individual companies and looking at valuations and trying to place bets that way. It was more of a macro theme, looking at commodities markets. And I had a similar experience where I would sit there with the chief investment officers of these large commodity trading advisors. And this was in 2012, 2013, right around when Janet Yellen was taking over the helm. And we were coming out of QE twist and into QE2. And I was simply asking them, like, are you guys worried about all this monetary base expansion? They're like, no, the Fed doesn't really control markets. And I think the amount of complacency that I witnessed at a young age at that level of high finance, if you will, for lack of a better term, was eye-opening for me. It was like, oh, all the quote-unquote smartest people in the room really don't care about something which I'm pretty sure will have an immense impact on global markets everywhere, whether it's equities or commodities and other financial assets like treasuries. And that was really radicalizing for me in a way where it was like, oh, wow, nobody knows what's going on. And that's same time falling down the Bitcoin rabbit hole and really realizing, oh, this is a solution to solve all this insanity in the world, all this mispricing. We need to fix the pricing mechanism, which is the money. And that dovetails into what we're going to talk about. Like I would argue that over the last 15 years, 16 years now, post 2008, the ability to actually go in and properly value companies has been completely distorted. We're looking at PE ratios of some companies like NVIDIA above 200, which is insane. Obviously, the amount of monetary base expansion and debt expansion has flown into financial assets, and the S&P at all-time highs, or it hit all-time highs end of last week. I'm not sure where it is today. I didn't check yesterday. And people view that as the stock market being a barometer of the economy. Like, oh, everything's well and good. But if you look at the dislocation that exists out there in terms of the quality of life that individuals have and the amount of economic pressure that your average Joe is feeling right now, it just does not compute with what's going on. So there's a dislocation. Bitcoin, hopefully, sound money standard will get us back to a proper pricing mechanism that will allow us to then go allocate capital efficiently and properly to do productive things to increase the quality of life of everybody. And then what we're doing is sort of a layer above that. Like, we're going to fix the money. And then to do that, we have to build out infrastructure that gives people access to that money and provides them utility to do things with that money. So that's what we're trying to do at 1031, investing in private companies, building out this infrastructure. But before we dive into the nitty gritty of what we're doing, I think it would be a good place to start would be to just dive into the heuristic of total addressable market versus other heuristics, which you open the piece with, these frameworks that investors use to sort of make their decisions. It could be value-based, it could be team-based, but the one that unites all that you put in the piece is total addressable market. What is the opportunity we have to get a return on our capital?
Yeah, absolutely. And I would say the various kind of heuristics that investors use to evaluate investments are like not mutually exclusive, right? So probably you should be evaluating a variety of things, including, you have to, even a great investment, can't actually, a great company can't be a great investment if it's like very poorly priced, right? So if you get in at a level that is dramatically overextended relative to kind of the free cash flow that the company can actually generate over, a reasonable holding period, then even if they are indeed like a good team in a good market with good product and, competitive moats, et cetera, the pricing of the investment can completely throw your returns out of whack, right? So valuation is important. That's one of the things that I saw not really being kind of respected during my time in traditional finance. So that's an important heuristic that I think we'll return to more and more as Bitcoin hopefully kind of resets our monetary framework. And there are various other kind of ways that you can chop up and look at whether a company is an attractive investment. And you should do all those different things. But the point that I make in the beginning of the piece, as you point out, is pretty much every investor, kind of regardless of whether they're just trying to buy, the cheapest things possible and hope that they can kind of get a pop in a relatively short time, just as valuations correct, or whether they're hyper focused on, growth and the most cutting edge technology that they can find, or anything else. Everyone needs to and has to inevitably pay attention to TAM, as you say, total addressable market, because for a given probability of success of the investment, and for a given quality of a team, and for a given level of scalability of a company's unit economics, a huge lever that will differentiate between all of those, holding them all kind of equal, is just how big is the prize that they're actually targeting, right? You can think of it on one extreme end of a local kind of contractor doing work around like his hometown. That may be like an absolutely great business, and probably we need like a lot more of those, and we need more skilled tradespeople and electricians than we have in this country for reasons that you talked about on other episodes of this podcast. But there's naturally kind of a ceiling on how much revenue that business is going to generate, and thus also how much cash flow it can generate, which is ultimately what you have to care about when making an assessment on whether you're going to make an investment or not. And so as you ramp up the addressable market, the shots on goal, the size of the customer base that a company is selling into, you lever up and you ratchet up the impact of the team and the impact of the scalability and the impact of the profitability for a given business with a 20% profit margin that can max out at $1 million of revenue, right? Okay, well, you get $200,000 of profit off that. If you can scale those same unit economics with that same team to $100 billion market, just by addressing a bigger opportunity, you've dramatically levered up and scaled up the price that you can pay for the investment to make sense and the amount of free cash flow that it can generate. And so, as I point out in the piece, like TAM is not the only thing that matters by any means. And in fact, certainly there are kind of more traditional VC early stage investors that have gotten way too focused on kind of like pie in the sky TAM numbers and said, I can pay pretty much any multiple that I want. I don't have to care about, time to revenue generation or time to profitability, because this company is addressing $1 trillion market, $100 trillion market. And so you can throw out these wild numbers, and even at a very low probability of success, you can convince yourself that, something is maybe a great investment. So that's not the way that we need to go. And again, I think as capital gets more expensive, as easy money goes away, that kind of thinking will go away. But there's still significant value as you differentiate between investments, in looking at how big is the actual opportunity set, because that's going to, at the end of the day, to bring it back to kind of like, boomer Warren Buffett language, like your margin of safety goes up if you're addressing a much, much bigger market than someone else. You just have more shots on goal to drive revenue, more potential customers, and a bigger total pie that you can sell into and maybe take share of, right? Would you rather have 10% of $1 trillion market or 50% of $100 million market, right? So just gaming that ratio in your favor by addressing the biggest markets possible is, I think, a major lever of investment success that pretty much any investor, regardless of kind of their stripe and what they focus on in terms of methodology, needs to pay attention to, and what every investor kind of out there is paying attention to. Yeah. In this piece, Bitcoin is eating the world was obviously a play on software is eating the world. You mentioned explicitly in the piece by Mark Andreessen from A16Z, Anderson Horowitz. And I think to set the context for the Bitcoin conversation, it is important to go back and look at the last wave of innovation that led to insane returns
for investors, which is obviously the transition to the digital age and the companies that really capitalized on that. So you have a great chart here of the investment returns of the core four: Apple, Microsoft, Google, Amazon, juxtaposed to the S&P, gold, and long bonds over a 20-year time horizon. And it is pretty insane when you look at it.
Yeah, absolutely. I mean, this is, I kind of acknowledge in the piece, like, this is not going to be surprising to anyone who looks at it. I think if you've been paying even the slightest amount of attention to, if you have, a retirement account, if you have any kind of like portfolio, and, increasingly, no one has been able to really save in dollars in a bank account. So we've all had to kind of pay more attention to this, right, over the last 10, 20, 30 years. I think everyone intuitively knows this is the case, right? That FANG stocks broadly, these massive tech leaders, what are now being called like the Magnificent Seven, are really holding up a lot of the S&P, and are explaining a lot of overall stock market returns, because and part of that is because of monetary base expansion and its kind of deleterious consequences and forcing people to apply more premium to them. But there's also real dramatic economic value that's been generated by them, right? Like there's a reason that these companies are in the position that they're in. And it's because, or one of the main reasons is because they were leading infrastructure providers at the forefront of a radical secular shift in the way that commerce operates, right? The dematerialization of communication and information storage and transfer through internet-enabled software was, the highest leverage, or among the highest leverage innovations and inventions in human history. And people obviously needed tools and applications and services to fully avail themselves of the benefit of that, right? And so the companies that you see on that chart, Apple, Microsoft, Google, Amazon, and several others that we can think of, won by positioning themselves as market leaders, providing those services. And, obviously the path to get here is strewn with, some corpses of companies that were once their competitors that didn't quite make it. And some of those companies just got bought by the few companies that you see on that chart. But nevertheless, there was very clearly tremendous value generated even before the crazy kind of multiple expansion of the last 5 to 10 years by the bellwether companies that enabled mass, both retail and enterprise use of the primitives of the internet protocol stack and of kind of consumer software, right? And so Andreessen, as you referenced, wrote his piece in 2011, "Software is Eating the World," to kind of encapsulate that point, that exact point, that this was a massive secular shift. And the companies that were driving it were set to, even in 2011, there was still a lot of low-hanging fruit to be picked. And the companies that were picking that low-hanging fruit were set to drive massive returns for investors. And that they did, right? The difference, I would say, with his piece versus kind of where we are right now with Bitcoin is in 2011, right? Like the iPhone had been around 4 years. Android followed shortly after. Facebook had been around, I think, 7 years. I think hundreds of millions of users at that point. Netflix was already doing streaming, and that was clearly picking up steam. Amazon had like pretty much already signed the death warrant for physical bookstores and a lot of physical retail. So he wasn't really saying anything like highly controversial. Yeah, maybe like capital allocators weren't fully paying attention, and maybe they were still like somewhat underweight tech. But in reality, like your grandma was already on Facebook in 2011, right? Like it was becoming a fairly consensus viewpoint. But where we're sitting with Bitcoin today is, we're 15 years ahead, probably 15, 20 years ahead of where Andreessen was when that piece was written. The theme is just as powerful, and I would argue even more powerful, but it is far less consensus at this point. And that means that the asymmetric upside is orders of magnitude greater. So that's a reason to kind of be excited, I think, about what we're doing.
Yeah, when you were going through that, the fact that the competitors came and went throughout time in the tech sector, I couldn't help but think I always thought that Ash Jeeves was going to make it and compete with with Google. But I guess, I mean, I completely agree. We're much earlier in Bitcoin's life cycle compared to when Andreessen wrote his piece in 2011, where the tech cycle was then. And I guess that gets into the question of timing. Like, can you be too early in this?
Yeah, I mean that's a key like lesson to learn in investing is that being early is tantamount to being wrong. So there are definitely situations where in my own career I've been kind of right on the investment thesis over like a 12 to 24 month period, but very wrong in like a 3 month period. And so timing is very important. What I would say though is I think what we've discovered over the couple of years, I guess 4 years now since Synth 1 was launched, and a couple of years since I've joined, is people always say in Bitcoin that the best time to buy Bitcoin was yesterday, the second best time is today. I actually think the flip side is true for Bitcoin infrastructure. A few years ago, even Bitcoin still had not gone through as many stress tests as it has today. Lightning was still, even more immature than it is today. And certainly I think it's still quite early for Lightning, but there were very few companies even, really building on it at scale. We did, multi-sig was still fairly new. Unchained was still having to really beat the drum on just even using collaborative custody at all. Now you can see like some real indications that those things have shifted significantly. We've had a lot more stress tests since, 5 or 6 years ago. Block size wars, FTX, the China mining ban, and a variety of other things. Yet another 80% plus price drawdown. I think that's 4 now in Bitcoin's history, maybe 5. And so we're at a point now where there's a greater degree of maturity in the ecosystem, in the builders in the ecosystem. And in just the last couple of years, we can say, anecdotally, and I think we might have actually put out some data on this in a prior piece that we wrote, but the number of companies coming to market with really interesting solutions is inflecting. I don't have the numbers off the top of my head, but there have been far more Bitcoin only deals done in the last few years, even amidst kind of the carnage of the VC carnage of 22 and 23, than the last couple of years probably, combined the deals that we've seen in the market overall, that vastly outstrips the total deals done in the 10 years prior, right? So I think we're entering the stage where the technology stack, the ecosystem, the companies and the quality of companies are mature enough and have progressed to the point where you would have been too early like 5 years ago, probably. I don't think we're too early anymore. I think we're at exactly the right time to lean into this thesis, especially heading into, a period of the next halving coming up and 11 major traditional finance institutions now having put, their imprimatur on Bitcoin being an investable asset for institutions. You and I might not care about that much. And I know I will not be owning the ETFs, and I highly recommend everyone, listening to this choose a collaborative custody option like what Unchained offers, or another collaborative custody option like that, where you can actually own real underlying Bitcoin while also not having to take on the complexity of key management. But that said, it's still very meaningful that the biggest asset manager in the world has now filed for this ETF, and Larry Fink, the head of that asset manager, has changed his tune in just a few years' time from Bitcoin is a tool for criminals, it's an index of money laundering, it has no intrinsic value, it makes no sense, to it's a tool that protects you. It's there in case your government tries to censor you, or it's there to protect you against monetary debasement. Suddenly he sounds like Ron Paul like 10 or 15 years ago, right? He's kind of parroting those same lines, and I think we shouldn't understate what that means for institutional awareness of and acceptance of and adoption of Bitcoin, and what it will mean over the next 5 to 10 years. And so I look at all that and I say, okay, no, we are not too early. Like, this is just the right time, where the asymmetry is still there, the alpha is still there. People still don't fully get why Bitcoin is differentiated and why these opportunities are exciting, but they're starting to wake up. the ecosystem is significantly more mature than it was even just a few years ago. And so we're at a really good kind of balancing point where we're not too early, we're not too late. And I think it's exactly the right time to be leaning into investing in these companies.
I completely agree. Having been around Bitcoin for 10 years, the maturity of the space over the last 5 years particularly has been amazing to see. And you couple that with the macroeconomic tailwinds that are coming our way. Not only is the fiscal situation here in the United States utterly dire, it seems that the banking crisis that we experienced last year is probably just band-aided over and lurking right under the surface, ready to pop up at any time. And then you have the culmination of geopolitical events that have happened over the last few years where the U.S. Has weaponized a dollar system, seized treasury assets, and you have other large players in the geopolitical realm beginning to form alliances that seem like they could attempt to erode the sanctity of the U.S. dollar as a global reserve asset. And you mentioned ETFs getting approved. And I think another thing socially, what I mentioned earlier, like people really feeling the pressures of inflation in their everyday lives is beginning to stoke that question in the common man's mind. Like, why is this happening? Why can't I live a higher quality of life like I was just able to 5-6 years ago? And naturally that question will lead them to the solution, which is Bitcoin. And once they come to understand it, which I think that's another part of the thesis here, is that, like, as it stands today in 2024, there's never been more of a wealth of a knowledge base built out for people to easily learn what Bitcoin is, why it's important. And you have different educational materials for the different types of archetypes of people and the way in which they learn. So I think timing is perfect. We've got another halving coming up. We were just in Nashville last week, and I think that is, I mean, obviously I've been hyper-focused on mining for the last 6 years, but I do think that is one of the first big dominoes to fall. Once the energy sector really notices and leans into the benefits that Bitcoin mining as an alternative revenue stream, a grid balancer, a way to be more efficient with your stranded assets. Once that light bulb goes off in the energy sector and they lean in heavy, I think that's a massive domino that begins to spread and make it obvious that Bitcoin is here to stay. It's a net benefit for humanity, and there's going to be a lot of activity. Companies spun up, people saving in Bitcoin. It's going to get really cool. And I think I've never been more excited. It is daunting. 10 years, many cycles. As you can see on my face, I'm only 32. I probably look like I'm 42. I've seen a lot, but
I wouldn't have put you a day over 28.
Oh, thank you. But no, the timing feels good. And I think the fact that Bitcoin has survived these waves and just really reinforced the value prop of the network, the peer-to-peer distributed cash system, the hard supply, and the fact that hash rate has gotten to the level that it is and been distributed geographically as it has over time. I think you'd be an idiot not to recognize that there's something here. But to fall back to sort of the underlying first principles of why this is important, like, why is Bitcoin eating the world, like, in your mind?
Yeah, for sure. The simplest answer is Bitcoin is superior money, and there is no way that any self-interested economic actor will be able to ignore indefinitely the consequences of what that means, and will be able to indefinitely not adopt and use Bitcoin in some way. I go through kind of the properties that make Bitcoin superior money in the piece and like a little table. It's probably something that, if you've been in this space for a little while, you've seen a version of it. If you're newer to the conversation, we can walk through it, there it is right there. I highly recommend just kind of taking a second to step through it, informed by people who have been in the space for a while, as well as just Austrian economics and kind of principles there. But these various properties kind of lead you to the inevitable conclusion that Bitcoin is the best money we've ever had. And as 1031 advisor Parker Lewis, famously, at least famously for those who are in the Bitcoin space, wrote in the piece, Bitcoin obsoletes all other money. Money converges to one, right? You don't want to hold 10 monies where, your money A is like your best one, but you also hold some of money B, which isn't quite as good, and it doesn't hold value as well, and it's not as liquid and saleable, but it's still okay, and money C, et cetera. Like, no, you will always trade the inferior monies. You always tend to trade the inferior monies as much as possible for the superior money. Even in the world that we live in today, you can look around and say, well, just about every sovereign nation has its own currency. And we're kind of in this world that Hans Hoppe called, partial barter between these currencies, which have like reintroduced the double coincidence of once, the problem money was introduced to solve. And so you could say, well, we haven't converged to one, in the last 50 years since the start of this fiat regime. Like, is it really true that money converges to one? But the reality is the world's settlement asset is the dollar, right? You can have these little fiefdoms that have their own currencies that they've made up that they kind of manage. But at the end of the day, the dollar has the dominant network effect. And if given the choice, and you see it around the world right now with the emergence of stable coins, especially, people right now want dollars. Thanks to the petrodollar system, which you've talked about on this podcast a good amount, and we have reason to believe is crumbling, partially for the reason that you pointed out, which is that the U.S. has really shown in the last few years that it will debase and seize your dollar-denominated assets and your U.S. treasuries at will if it wants to, and that's just one of the reasons that system is kind of crumbling. But for now, the dollar is the big dog. There are not 10 big dogs. There are not 10 major kind of reserve assets for the world that people want above all else. There's one, and it's the dollar. Our thesis is that will inevitably change over who knows what the time frame is, 10 years, 20 years, 50 years. But it will shift to being Bitcoin for the reasons that we outlined in this piece about Bitcoin's superior monetary properties. Bitcoin is absolutely scarce, so it will be the best store of value over time. That's enforced by decentralized consensus of self-interested actors that cannot be easily gamed. It's permissionless to interact with. It's digitally native bearer value that can be sent globally 24/7. Very, very difficult, if not impossible, to censor, at least for any meaningful amount of time. And capital controls are not effective against it. And so everyone, as knowledge distributes, every person on the earth will want to increasingly get more Bitcoin. We've seen that in history with kind of the emergence of gold as the global reserve asset, up until the point at which gold no longer scaled for global commerce. It naturally, spontaneously evolved as the world reserve asset, the settlement asset across a bunch of different highly diverse societies around the world and at diverse points in history, because everyone wanted the best money. Gold was, for a long time, the best money. We're now living in this fiat experiment that has, for about 50 years, disrupted that. And that the seeds of that were sown by gold's failures and its spatial limitations and its inauditability and its difficulty to custody and move around. But that experiment, as you've referenced, is probably not long for the world. It's creating significant instability and political pushback in different pockets of the world in different ways. And it will be ultimately impossible for any corporation or any government to force people to value the dollar or any fiat currency more than they value Bitcoin. They might be able to, for a time, mandate usage. They might be able to enact certain laws that make using Bitcoin more burdensome. But, as Mises points out in Theory of Money and Credit, they can't make people subjectively value a currency, right? So the properties that make Bitcoin superior will inexorably pull people around the world to use it and store wealth in it until the point at which everyone in the world is using Bitcoin as their reserve asset. And I can stop there, but I would say there are two major implications of that I think people who are even constructive on that thesis, people who even already own Bitcoin, whether you're an institutional allocator and you have some allocation to Bitcoin, or you're just a pleb on Twitter who stacks sats every day. Both of those types of investors, both of those types of savers will kind of only go that far and then stop. But if that's true, then it has two big implications, one of which is the picks and shovels, if you want, that will enable people to acquire Bitcoin, use it, store it safely, put it into Lightning channels to spend it, insure it, distribute its custody, whatever you want. All these different kind of applications that we can get into will naturally be buoyed up and will be required ultimately for that distribution process to take place. So for everyone, if everyone in the world is ultimately going to own and use Bitcoin, they will be doing that partially with the help of applications and service providers and tools developed by companies that are providing UX that allow them to do that with a 10x, 100x better user experience. Some of that will be certainly free and open source software that people can just download and run and without any sort of connection to a company. But there will also be corporate service providers like Unchained or Anchorwatch or Strike or any other company that you see in our portfolio that can provide, that can and will provide a better experience that will be demanded by the market as people look for ways to acquire and use Bitcoin. So they kind of go hand in hand, right? If you're bullish on Bitcoin's adoption, then you necessarily have to be bullish on its picks and shovels too. So that's implication one. We can maybe unpack that, or however you want to take it. We can talk about implication two maybe in a second.
Yeah, it's dig into implication one. I mean, you mentioned many of the different companies that are providing these tools and services to be able to reap the utility and the benefits of Bitcoin, but let's get a little more granular and better define the subsectors and the verticals that you think are addressing these different needs.
Yeah. So I'll give you the way that we kind of cut it up at 1031, but this is not, the only way to think about the space. And there's also obviously overlap between a lot of these. But the first most obvious one is, to go back to Parker Lewis, if Bitcoin is money, I think he wrote this in some piece, or maybe he said it in the talk, but if Bitcoin is money, the first order product of money is financial services, right? So that's kind of if you think about the addressable verticals in like concentric circles expanding out, one of the first, center of the concentric circles is financial services, products that allow you to save in Bitcoin effectively, to custody it, to have, obviously to buy it as well, to buy it and trade it as necessary, to take out loans against it, and do anything else that involves interacting with the traditional fiat system, and building those interactions between the traditional fiat system and Bitcoin. And so, a few examples of a company like that would be obviously Unchained is one. They provide a lot of those services, and we're kind of the forerunner in building kind of those services out, building out collaborative custody to allow a user to benefit from let's say the benefit of a custodian without actually surrendering to custodial permissions. So in a 2 of 3 multi-sig, I, as a retail user, or I, as a company, can hold 2 keys. Unchained can hold 1, and thereby eliminate the risk of eliminate or greatly reduce the risk of catastrophic loss if my private keys, if my hardware wallets are compromised. Right? They also provide kind of intuitive trading and lending services on top of that, all in one interface, so that I can interact with my Bitcoin more in the way that I would be kind of used to doing if I'm coming from the traditional finance, traditional fiat world, which ultimately, like, definitionally everyone is, right? Everyone's kind of coming from that world. And so a company that can provide a way to much more safely custody the Bitcoin and then also use it in these different ways that people are familiar with, is highly valuable and very necessary too, right? It's necessary for most people to have something like that to bridge from, not just buying Bitcoin and leaving it on Coinbase, having their Coinbase IOU or having their ETF IOU, as will increasingly be the case for many people as their first kind of touch point in Bitcoin, but also not have to immediately make the leap to, holding generational wealth on a hardware wallet in their desk or, burying it in the ground somewhere, right? Those are two ends of the spectrum that people are naturally uncomfortable with when they come to Bitcoin. And so having a collaborative custody option that also gives them the ability to interact with Bitcoin in ways that they're familiar with from a traditional finance perspective is highly valuable and very important. And now we're also seeing, you've banged the drum on this a lot over the last year or so, multi-institutional, multi-sig. So not just, not even only having a relationship with Unchained, but having a 2 of 3 relationship with Unchained or OnRamp or AnchorWatch or various other kind of custody providers that we can talk about who form a quorum for you and allow you to interact with Bitcoin without ever actually having to touch private key material, which is necessary for a lot of institutions and enterprises that might want to use Bitcoin and have it as a treasury asset, but have fiduciary responsibilities that prevent them from being allowed to have the discretion over private key material. Obviously, there's more of a trust trade-off there, but it's trust distributed across 3 institutions rather than just a single point of failure. And for those who are listening, I would highly recommend reading Dhruv Bansal's piece from Unchained on building a network of keys, a network of key signers. And I think that principle will become very important to real institutional adoption of Bitcoin. And to our point earlier, that's an example of something that was not even on anyone's roadmap 3 to 4 years ago, right? It's only come about because of advances in multi-sig and understanding of multi-sig and getting more institutions kind of on board for that. And so that's an example of how a lot can really happen in a very short time. And a lot has happened to put Bitcoin and Bitcoin companies in a position to really bring mature offerings to market. And so that's a lot on just financial services. To maybe quickly run. Yeah, go ahead.
Well, I was gonna say, and I would add with Unchained particularly, not only do they have the technical expertise to manage and create the software to manage these multi-sig quorums, but they also understand the asset as well on the financial side and the cyclical nature of Bitcoin's price history. And on their lending products specifically, I think this really shines through, where they have an extremely low LTV, which most people look at and are like, oh my God, that's pretty insane. But they understand the asset. The team understands the asset, and they know that there's going to be a lot of volatility. So they have a low LTV to reduce the amount of liquidity. They never had a loan loss throughout their 5+ years of offering this product. And when you juxtapose that, like leaning into to toot the 1031 horn here, disclaimer for this episode, obviously 1031 is invested in a lot of the companies we're talking about, but I think Unchained shines through because we were getting made fun of for quote unquote missing the BlockFi wave a few years ago. They hit a $4 billion valuation at the peak of the 2021 or 2022. And we made the conscious decision, like, we don't trust the way that they're running their lending product. It doesn't make any sense to us. And that proved to be a wise decision at the end of the day to allocate towards Unchained, which was much more conservative, having a fine understanding of the asset and the volatility that comes with the Bitcoin price, and BlockFi, which tried to apply this fiat model to the Bitcoin standard. And there's no lender of last resort in Bitcoin. And if you lend it out and somebody loses it, you're not getting it back.
Yeah, absolutely. It's a great point. Not having any loan losses on a product like that through 2 bear markets and the carnage that we saw in 2022 multiple times with Terra Luna, then BlockFi, then at the end of the year, FTX, right? Like to make it through all of that with no loan losses is just really testament to what they've built, and also a testament to just focus on Bitcoin and the importance of that. That's true for all the companies in our portfolio, right? It's not just an ideological theme where we're Bitcoin maxis, and so we only want to invest in people who are ideologically aligned. You could say that's like there's relevance to that, and I think that's a it says something about you as a founder if you have kind of made the jump to understanding why Bitcoin is spirit money that will obsolete all of the money. But even more kind of importantly, just from an investing perspective, there's significant edge in understanding the asset that you're dealing with, and the things that can go wrong with the volatility that Bitcoin experiences if a product like, a Bitcoin-backed loan product is not structured well in terms of conservative LTVs and non-rehypothecation of the underlying collateral, right? So that's just a feather in the cap, not just for Unchained, but for every business that is exclusively focused on Bitcoin, because that drives real commercial edge and real sustainability to the business that I, as an investor, care about, even independently of some sort of ideological, viewpoint on Bitcoin versus any other, cryptocurrency. But to just quickly round out on your other question about the verticals that we look at, the other major ones would be kind of Lightning and Layer 2. That's something like a Strike or a Mutiny wallet, very different kind of ends of the spectrum and what they provide, but both leveraging Lightning to do really innovative things. I would say also our focus is not even so much on Lightning as such, although that's the only real Layer 2 protocol that is battle tested and has existed for 5+ years. So we've done a lot in Lightning, but I think I say Lightning / Layer 2 because we are open to the idea of new protocols coming along that could also have commercial viability and commercial use cases. You might call, I think it's controversial perhaps, but you might call the Fediment protocol, right? Like a Layer 2 in some way. I know there, again, there's some disagreement on if that's the right way to approach that, but it is kind of an additional protocol that only really came about in the last couple of years that extends Bitcoin's utility and provides kind of new ways to interact with Bitcoin. And you're seeing that with what Fedi is spinning up, and famously, kind of you and Odell were the ones that kind of spoke Fedi into existence. And I'll let you speak on that a little bit if you want. But also now Mutiny Wallet, like I mentioned on the Lightning side, also doing a lot with the Fediment protocol to kind of carve out their own use cases and their own niches. And so that also speaks to what you were asking earlier about whether it's too early or not. Fediment is a great example of just the vibrancy that we're seeing in the ecosystem over the last couple of years. And because these are open source protocols, a Lightning company can very easily kind of integrate Fediment capabilities in some way, or a financial services company can integrate Lightning, or you can have all these kind of cross vertical pollinations in a way that you really can't in closed source tech stacks or kind of more broadly diversified VC portfolios where you're investing in fintech and insurtech and health tech and all these different kind of things that don't really talk to each other or play with each other. So that's kind of the second major vertical. Again, I said I would round it out quickly, and I failed to do that. But
take your time.
I'll just say quickly, consumer applications would maybe be the next one. So something like Primal or Fold or Bitcoin gaming plays. All of those are kind of using Bitcoin in ways that talk to and make sense with existing consumer use cases. They're not necessarily about Bitcoin, but they're more kind of using Bitcoin as a means to an end to drive consumer engagement and establish consumer behaviors. So Fold does, rewards. Obviously, rewards is, I don't have the number off the top of my head, but a massive category that merchants spend, billions of dollars on every year. And Fold is focused on kind of using Bitcoin to create interoperable rewards, which are more valuable to consumers. You've got Primal, which is obviously a Nostr client. Nostr is itself not just a Nostr client, but a Nostr client and tech stack. But Nostr itself is another kind of protocol, which some have maybe called a Layer 3. I don't really like that classification, but whatever. But it's one of these other kind of edge protocols that can naturally directly interact with Bitcoin, as it's an open source communications protocol interacting with an open source money protocol, right? And so that's another good example of consumer application. And then also the last two would be kind of mining infrastructure. And so that's prop mining plays, like actual companies that are doing self-mining, Grid being an example of that. And then also just picks and shovels around mining, value-added services and technology to allow miners to gain an advantage or to power themselves off power sources that would otherwise be inaccessible. So upstream data is an example of that. Also Giga Energy, both of whom are really seeing a lot of great uptake among oil and gas producers, something that you've talked about a lot on the show and we think is going to be a huge theme, which maybe we can talk about a little more as it relates to the way that Bitcoin will slowly kind of spread out and eat the world and eat these other industries. And then, last vertical I would say would be security infrastructure. So that's any hardware or software that enables either a single user or an institution to securely and or privately interact with Bitcoin. The most obvious example of that being CoinKite and the Cold Card, the Tap Signer, the various products they have to make that accessible for everyone. And that's another good example of 5 years ago, those products were substantially less advanced than they are now. Tap Signer didn't exist. Cold Card was several iterations earlier, and they've made a variety of improvements since then that have kind of turned that product into the gold standard for interacting with Bitcoin securely and privately in a way that any random pleb can go access. So yet another example that we're exactly at the right point to start investing aggressively in these companies. We're hitting the point at which, to quote or to paraphrase Andreessen in his software piece, he said, we're finally at the point where all of this technology can be delivered to consumers at scale around the world. We're maybe not exactly like right there at that spot yet with Bitcoin, but we're very close. And you want to be investing in these companies when you can see the contours of that taking shape, not when, it's already happened and you're kind of just saying what everyone's already seeing, right? And so there's still a lot of alpha to be generated in investing in these types of companies. So long-winded response, but that's the general kind of heuristic, I guess I would use to carve up the overall infrastructure.
Yeah, there's a lot to go down. That's what I love about the team we've assembled at 1031, because obviously I have experience on the mining side of things. Matt's heavily focused on privacy, Lightning, Noster, Freedom Tech more broadly. Yourself, Grant, Jonathan, really understand the financial services side of things. And I think we complement each other extremely well, which allows us to go do a lot of these interesting deals and explore the full breadth of the industry as it's forming. And going back to the mining stuff, like that is, again, coming off the tails of the Energy and Mining Summit in Nashville. The one thing that interests me about the mining play specifically is it's somewhat of a proxy play on energy more broadly, which I think is going to be a massive theme over the next decade, as it's becoming abundantly clear that we've completely borked the energy systems of the world to a certain extent. It needs to be fixed. There's going to be a lack of supply in a lot of areas, which is naturally going to drive up prices. And these companies are going to be looking to create efficiencies, and off-grid mining, on-grid mining, for that matter as well, both provide alternative revenue streams that are just going to be desperately needed by these energy companies. But then going on that too, like the rewards play with Fold just makes sense. Why would you lock somebody into some company shit token? We can just give them Bitcoin rewards and they can spend that anywhere. Financial services, I think they're going to get more robust as people begin to hold more Bitcoin for longer periods of time. And you have it in the piece. You have the HODL waves that prove that that is happening. So yeah, I think the timing is ripe. And now we just spent like 30 minutes on implication 1. What's implication 2? Do you even remember?
Yeah. No, I got it. I mean, I guess putting a pin in implication 1, it's basically, there's probably $1 trillion. I'm throwing out a number, but I think it's something like that. $1 trillion of revenue opportunity just in the picks and shovels, if you want to call it that, of the enabling technologies that will see tremendous demand on the back of growing Bitcoin adoption. And it's both just the companies that exist today with the capabilities Bitcoin already has, but it's also, the companies that will emerge on top of this current like generation of, innovators, right? I think about something like, I put it in the piece, like a Shopify, $100 billion plus market cap business, or, Salesforce or ServiceNow, or you can think of a bunch of different kind of tech businesses that are not in like the Magnificent Seven, but are still like very, very valuable and do billions of dollars of revenue. Those couldn't have existed like 20 years ago. You needed prior advancements in bandwidth and networking and server architecture, as well as just like the distribution of like high-speed internet and the growth of like consumer computing devices to enable something like e-commerce, right? But once you have all of those things in place and you have the capability for e-commerce, then now you can build a business like Shopify. And there will be more businesses coming down the pipe, just in kind of the picks and shovels category of Bitcoin companies that couldn't have existed without work being done by like the current innovators that we're seeing today. So that'll continue to be, it's not just like what's the opportunity right now for the companies that exist today. It's also a question of what are the companies today going to enable that will allow for some totally, impossible use case, a use case that's impossible today, but will be very mainstream within kind of Bitcoin picks and shovels in 10 years, right? So that'll compound, and that'll be a massive opportunity kind of by itself over the next couple of decades. That's implication one, generally. The picks and shovels are going to do great. I think implication two is what we like to say at 1031 is just like every company had to be an internet company, had to become an internet company over the course of the last 20 years to survive and to stay relevant and to thrive. So every company will have to become a Bitcoin company to survive. The kind of reasons for that and the drivers for that are multifold. One is that as those Bitcoin picks and shovel providers start to gain traction, start to build real businesses, the ones that are touching those kind of inner parts of the concentric circles of Bitcoin verticals will start to naturally disrupt things like payments infrastructure, right? And financial services, which we just talked about, and asset management. I think it shouldn't be understated how revolutionary digital bearer value that's absolutely scarce, that can be instantly settled anywhere around the world at any time, how radical of a paradigm shift that is relative to the Rube Goldberg machine of the chain of, credits and IOUs and counterparty risks that are required to make, a single transaction at a supermarket work, right? There's so much fixed cost built into that. There's significant delays in settlement. There's armies of accountants and technicians and lawyers kind of holding that all together with duct tape. And that's how, the traditional payment system is built. And over time, the history of economic development, the arc of history bends toward technological innovation winning. The arc of history bends toward, as Jeff Bezos said, your margin being my opportunity. Free markets, such as we have them, maybe they're not as robust as we would like in the U.S. today, but they're still operating to some extent. Free markets are ruthless about excess margin and inefficiency. And if there's a way to take costs out of the system, if there's a way to do something that serves end users better and that an entrepreneur can profit from doing, the market will do that. It's just a question of how long it takes. And, payments infrastructure and financial services are kind of like the first, industry in the crosshairs of Bitcoin picks and shovels companies that will develop and start to kind of encroach on their territory, right? Because they're providing end users a better, more cost-effective, more secure way to make payments, to custody assets, et cetera. And so when you think about implication two, that's kind of the first way it plays out is incumbents look at that growing trend, which is an inexorable trend if you believe that Bitcoin adoption is inexorable and it will grow to everyone in the world. They'll look at that trend and say, we need to either integrate Bitcoin in some way, we need to develop capabilities on our own, or we need to buy some of these companies, right? We think, at 1031 that the option that a lot of incumbents will choose is to be strategic acquirers. to avoid kind of being the victims of the melting ice cube of watching their businesses evaporate. But there will also be forward-thinking companies, forward-thinking blue chips that maybe do have the ability to kind of develop in-house. But either way, what you will effectively see is more incumbents of traditional industries needing to integrate Bitcoin in some way and becoming Bitcoin companies. And so that expands the surface area for what you can invest in as an investor focused on Bitcoin infrastructure. The other thing to consider is, or I guess I would say, just to put a little more kind of detail on that, it's not just speculation, right? Like we're already seeing it with a variety of companies, even outside of, you're seeing it in payments, you're seeing it in financial services, but even expanding outside of that to some of these further, the rings that are further out on the concentric circles, right? Oil and gas, power and utilities, like you mentioned, Bitcoin mining is getting substantially more integrated into those industries in a way that was very much on display, as you mentioned, at the Nashville Energy and Mining Summit last week. There are senators that are kind of seeing that connection. There are major energy executives on both kind of the grid and the utility side, and also on the regulatory side and the oil and gas side that are seeing that the synergy between Bitcoin mining and what they do and trying to leverage it. And so that's already playing out, and it's not surprising because it's exactly what we saw happen, with the internet. Logistics companies, manufacturing companies, medical device companies, all had to start leveraging internet capabilities if they wanted to compete with both upstarts, startups that were kind of doing something interesting with internet-enabled software in their industries, and also their more forward-thinking incumbent competitors that were either buying those companies or trying to develop similar solutions in-house, right? And so if Bitcoin is just as or more influential to global commerce as the internet, then you would expect to see the exact same phenomenon with companies in every industry. And, like I said, we're already seeing it in the portfolio, and maybe the most kind of exciting sub-implication of that, I guess, for us as investors is when we see a company like StatNews we have in the portfolio, a non-Bitcoin company, see the power of Bitcoin and what it might be able to do for their business over the long term, and come to us to invest in them and to give them some guidance on their Bitcoin strategy, and to have us on the cap table because we're aligned with seeing the way that the world is going to go with Bitcoin adoption. And so that's an example of, an early example of something that I think we'll see a lot more over the next 10 years is non-Bitcoin companies of various different sizes, both kind of, pre-seed stage startups and Series B, Series C companies that are like about to go public, looking at this trend and deciding they need to find ways to integrate Bitcoin in some way, whether that's Lightning micropayments for like a consumer application, or whether that's a heavy industry company looking at ways to kind of use Bitcoin mining, like you've referenced. That will dramatically open up the surface area even further for investors who are focused on the space. And I put some numbers around it at the end of the piece. It's virtually impossible to call that right now. It's a little, I don't want it to be, moon math or kind of pie in the sky thinking. But if everything that I've just said is right, if Bitcoin adoption is going to do what we think it's going to do, if it's going to lead to, $1 trillion plus of new value created by picks and shovels providers, and that is itself also then going to lead incumbents to look for ways to integrate Bitcoin in their own industries, all of which I think is kind of, follows from just Bitcoin being superior money. If that's the case, then Bitcoin infrastructure will capture some percentage of the revenue generated by all those industries that need to start integrating Bitcoin. It'll enter their value stack in some way, or they'll just be disrupted and the revenue streams will be replaced by companies that are leveraging Bitcoin. And so with just the set of industries that I talk about specifically in the piece. Obviously, this is not even, all the industries in the world. These are just the ones that are kind of the most obviously impacted by Bitcoin. With 1% revenue penetration, you can get to $150 billion in category revenue for kind of Bitcoin companies. This is a very high level, rough heuristic way to kind of think about the opportunity, but it gets at the intuition that because Bitcoin is money, and monetary technology will affect every industry in some way. There is no commerce at any scale that can avoid tapping into and being touched by monetary technology. Bitcoin will have a role somewhere in the value stack of all of those industries and even more. And so once you start to take that seriously, you have to ask yourself, even at very low penetration of those revenue streams, and to be clear, in financial services and payments and oil and gas, I think the penetration is going to be a lot higher than 1%. What does that mean for the available revenue? What does that mean for the TAM, right? To get back to the beginning of our conversation of this category of companies. And, it puts them even at a conservative estimate, around the size of enterprise SaaS. Enterprise SaaS is a $200 to $300 billion revenue category annually. And so at fairly low penetration of even just a select few of the most obvious industries that should be disrupted by Bitcoin or should be affected by Bitcoin in some way, you're basically at enterprise SaaS level, because Bitcoin gets to play across all of these different verticals because it's money, because this is monetary technology that everyone needs in some way. So as Andreessen says, that's the big opportunity. That's where we're putting our money.
I mean, I thought I was bullish after helping you read the piece, and then read it again after you publish. But hearing you articulate it in person just got me even more bullish. It's pretty insane.
Yeah, I mean, no one is bullish enough, right? That's always true.
And so, I think with all that in mind, we've talked about the trend of incumbent companies adopting a Bitcoin strategy. Why do you think the incumbent venture capital space has not seen this? And why do you think even within the broader crypto venture capital space, this thesis hasn't been recognized and there's a relatively small pool that we're playing in at 1031?
Yeah, absolutely. I think it's a couple things. Up until 2022, when you finally had the washout of a lot of the froth of ZERP, the end of ZERP, and a lot of which was manifested in kind of the altcoin industry. Part of the reason, I think, was because venture capitalists, looked at altcoins as this unprecedented opportunity to get quick liquidity, right? You can, in the market where literally every asset that's not tied down is just constantly going up in value, and you can always underwrite, someone's going to come pay me 2x or 5x or 10x multiple for, this round that I'm doing right now. Someone's going to come mark me up, or, there's just money sloshing around and I can find a buyer somewhere. There's first of all, minimal incentive to diligence the long-term viability of any project, because it's all kind of a greater fool game. But I think specifically with crypto and VC, there was this unprecedented opportunity to pull forward liquidity events, right? Normally in venture capital, when you're making an investment, it's illiquid. Your investment timeline could be anywhere from 3 years to 5 years to 7 years to 10 years, right? And, ideally, if you make good investment selection, you're compensated at least on a few of those investments with, outsized 10x, 20x, 100x, 1000x type returns, but it takes a long time to get there. And there's kind of the purest form of VC is the ultimate low time preference game, or it should be. But in the last few years, again, up until the washout of 2022, you had a lot of VCs able to get, liquidity in 6 months by funding some token project and taking a big allocation of a pre-mine, or just an allocation of, founder tokens, right? And then listing those publicly somewhere on some exchange and hyping it, spending, some amount of money to hype them up, having a good marketing team. And selling those, I'll say, to retail aggressively. And For some retail investors, that maybe worked out a little bit if you timed it exactly right, but for most, that was probably not a good trade. But it was generally a great trade for the VCs that had the pre-mines, right? And it allowed them to operate, with to have kind of the return profile of a venture capital fund with the time horizon of a hedge fund, which is a compelling argument if all you care about is kind of very short-term fiat gains and not kind of building a long-term business, and investing for where the world is going, not just kind of where it is, right now, kind of right at the tail end of ZIRP, right? So that was one of the big things that I think led to substantial distraction in VC space, which is just like, you can't do that with Bitcoin, right? There's 21 million Bitcoin. There's no way to game a Bitcoin company such that you can, go sell a bunch of pre-mine tokens to retail. And so if you're going to invest in a company that's building on Bitcoin, you have to be willing to invest for at least like a few years, right? I do think, we will have some exits in our portfolio within the next like 3 to 5 years, but there will be some that take longer. And in any case, like, we will be unlikely to have, a 5,000x markup event in the next month from, a pre-mine that we kind of drove. And so if that's what you're optimizing for, I can see why you would only focus on kind of, crypto schemes. As we saw, as we predicted at 1031 and, as we structured our kind of investment thesis to express this theme, but that all ultimately blew up to significant kind of reputational damage to some of the investors who were involved, many of the founders who were involved. And, also beyond the reputational damage, like if you were not the winner of the musical chairs game, then you're sitting there with a really big markdown and a lot of zeros to take back to your LPs. So that worked out ultimately kind of as we thought it would. It was, as I said, like a musical chairs game that could be played for a little while, but was not ultimately sustainable. But it was, I think, a huge distraction and a huge source of noise for any crypto VC that otherwise might have taken the time to look at where the space is actually going over the next 10 years, right? So that's the first big thing. The other thing I think is Bitcoin is a big paradigm shift in thinking for anyone who comes from a traditional finance background. We referenced this a little at the beginning, but you generally, when you're operating in kind of a fairly short-termist Keynesian influenced mindset, and that's how you've been taught in college, and all of your colleagues around you think the same way, and that's how you have to play, the game that you're in professionally. It's not profitable for you on a day-to-day basis to step back and ask yourself the question of what is money, right? That's a huge distraction. It takes 100+ hours to even start to kind of grok the underlying problems that money is trying to solve, and then another 1,000 hours to understand why Bitcoin is money and how it works and everything. If you're from a background where 2% inflation is good because economists say so, and that's the sign of a growing economy, and that's just an axiom that you take for granted, it's very difficult for you to kind of step back and evaluate what would actually make good money, and why actually does money need to lose value progressively over time, and why do we have a central bank issuing money ex nihilo to greater and greater degrees every year, right? So I think part of it is just there's a need to step back and do work that traditional finance roles don't necessarily incentivize you to do. So for the people who are early to that thought process and take the time and get pulled down the rabbit hole early, there's alpha to be generated. There's an asymmetry in kind of being first to the conclusions that would follow from asking those questions. Just like there's asymmetry to just owning Bitcoin initially, before the rest of the world catches on. So there is also asymmetry to owning equity in Bitcoin companies before most crypto investors or traditional VCs understand the implications of Bitcoin being money and what it means for their investments in other crypto projects, and what it also means for their lack of exposure to Bitcoin infrastructure companies.
Yeah, extremely well put. And I think beyond that, like I think what we're doing at 1031 to pump our own chest here, I think again, since we're Bitcoin focused, I think it's becoming clear in the broader VC market is if you have a thematic fund focused on a very niche market, it's probably more advantageous for you. But I really like what we've done, what Grant, Jonathan, Matt, myself, you have done to really imbue the nature and the ethos of Bitcoin on what we're doing, like with our tribe events, really trying to hyper communicate with LPs to let them know what's going on in the portfolio, and then getting the portfolio companies themselves to speak with each other, to do some knowledge share and to figure out how they can work with each other. Because that's another unique part of what we're doing at 1031. The portfolio that we've developed is a lot of the companies, you didn't even mention it explicitly, but you're talking about Unchained. They work with Cold Card. They work with mempool.space to an extent as their block explorer. There's many other synergies across the portfolio that can materialize because you're building on this open source protocol. It's so early. And so investing in one company can help out another company in the portfolio as they can collaborate and sort of raise each other's boats.
Yeah, absolutely. And like I said, I referenced this earlier, I think a little bit, but you don't get that opportunity to benefit from those synergies if you are like a broad, diversified investor, early stage investor, VC, investing in pretty much every vertical out there and kind of taking a spray and pray approach to not just every vertical, but also the many companies, populating those verticals, right? And so I think that's, I referenced this earlier at the kind of the very beginning, but like there are huge returns to specialization and focus. Even if, you're a capital allocator out there kind of hearing this message and thinking, being somewhat skeptical of some of our conclusions about money or about Bitcoin as money, there's no denying, I think, that, like I mentioned earlier, the Citadels, the Millenniums, the Balyasnys, et cetera, of the world that have kind of gone to this highly focused multi-manager framework where you have very smart investors going inch wide, mile deep on very particular sectors, has generated outsized returns for those strategies. And I think it's no different here. You can't overstate the power of being highly hyper-focused on one very particular theme, which for us is Bitcoin and Bitcoin infrastructure, both because it makes you understand the companies building on that better than anyone else. So you can identify what looks promising and what doesn't, where the weak points might be, where the opportunities might be better and faster than anyone else. But also because it gives you just the best network that you could possibly have. Many of the companies in our portfolio, are exclusive to us because you and Matt and Grant and Jonathan have just developed relationships with some of the founders over years and years. And when, smart developers finally just kind of wanted to put pen to paper and build out an idea into a company, like they came to us and said like, hey, I want you to be the only, investor on our cap table because I know you and I learned a lot from you. In the case of you and Matt, I know we're aligned and I've gotten a ton of advice from you in the past. And so let's just do it. You guys will be the only one on the cap table. You don't get that by being, highly diversified, right? You don't get that by having, a sleeve that invests in like Solana and a sleeve that focuses on the Ethereum ecosystem and a sleeve that, does some other random like tech vertical, integrated within like $100 billion portfolio that's invested in 1,000 other things, right? You get that by being hyper-focused and on the ground all the time with the smartest people who are pushing the space forward. So again, as I just think about like, whether you care about the Federal Reserve, whether you care about, Bitcoin as money or not, I would just consider as you're looking at the space, ask yourself who's best positioned to if we're right about this, to benefit the most from it and to make the best investment selections within this theme? Is it someone who, spends 1% of their time per year kind of casually thinking about the space and trying to arrange some calls, with founders whenever he can? Or is it someone who is entirely, obsessively focused on this and lives and breathes it every single day, 24 hours, 7 days a week, basically? And I think, that the question should kind of answer itself. Focus is a highly powerful lever, to driving investment returns. And that's a big part of what we do.
Focus. It's important. It's important. But for us, the companies, it's a beautiful thing. It's fun. Are you having fun, John?
I am having fun. It's a great time. Waking up and doing Bitcoin stuff all day is a dream come true. It's a ton of fun.
Well, it was a big leap of faith for you coming from Citadel. You could have rode that train pretty far. Came to a somewhat upstart venture fund in the Bitcoin space in 1031 at a time when the market was blowing up. What's the first 2 years working full time in the space been like? Reflecting right now, a little introspection.
Yeah, I mean, it should tell you a lot about my conviction, right? Like,
yeah.
I wouldn't just kind of jump for any opportunity. I really do think 1031 is very unique. I think, if you look at what we've done just even the last 2 years, deployed over $100 million into the space, biggest portfolio in the space. Like I mentioned, a ton of our investments are exclusive because of the relationships we built up over the last 10 plus years with you and Matt, and then Grant and Jonathan as well. And I think it's just fully validated. The last 2 years have fully validated kind of why I made the decision I made, and made me even more kind of bullish about the opportunity that I see ahead of us. The ecosystem is, like you mentioned, even more vibrant than I expected it to be. Kind of when I was, on the outside looking in, paying attention as much as I could to the companies and the builders in the space. That was not enough to help me fully appreciate how much development and how much innovation there actually is, and how quickly it's moving. When you're focusing on it every day, you really see that, front and center. And so that's all been very validating. But yeah, I think, the proof is in the pudding. Our work speaks for itself. And, I think there's $1 billion plus of deployment opportunity out there in just the next few years in the space that we can go tackle, and that, we plan to tackle. So excited.
Yeah. What excites me too, like this morning, we sent out that letter to FinCEN and co-signed by a lot of the companies in our portfolio. And that's one thing that gives me incredible joy. Obviously, working with people like you, Matt, Grant, and Jonathan is incredible. But then obviously continuing to develop relationships with the people, the builders, for lack of a better term, creating the infrastructure that is going to lead us to a Bitcoin standard has been extremely rewarding. And to add to that, like, I do think the people that are building out this infrastructure right now are in it to win it, number one, but get it as well. And I think the co-signing of that letter to FinCEN was indicative of that people understand the gravity of the situation that exists in our world right now, that things are terribly broken. We need to fix them. And people have formed companies and are building tools to go fix the world. And there's obviously a large, enormous economic opportunity, as you laid out, in Bitcoin is eating the world. But that's the other thing, when you can marry that economic opportunity with a drive for virtue in the world, which I believe all the companies in our portfolio are doing. It's just a very special thing, and I feel very fortunate to be on this journey with you, with everybody else at 1031 and everybody else in the portfolio.
Yeah, no doubt. I would be remiss if I didn't mention, when as I said kind of at the start of this conversation, growing up 15, 16, 17-year-old kid into Ron Paul and into ending the Fed and preserving, civil liberties in the U.S. and kind of returning the country to some of the principles on which, I think it was founded. I was really disillusioned, with the prospects for that over kind of my time going to college and then going into traditional finance roles, not necessarily because there's anyone particularly. I mean, certainly, I think there are executives in the space in some of those companies that are actively working against all of those principles. But more than anything, I just, you kind of encounter like a degree of apathy about any of that. And, I think it's been very invigorating to see both my coworkers at 1031, you guys, but also, like you said, all the founders that we work with are also very driven by, in most cases, those principles. And in some cases, certainly we disagree. There's not, ideological homogeneity among the portfolio by any means, but where it matters and where it counts, the people that we invest in are very, very highly principled. And yeah, shouldn't understate how unique that is. And frankly, I also think on a long-term basis that drives investment returns too. So it's a double-edged benefit for us, both the financial case long-term of Bitcoin eating the world, and also just what it means for the types of founders that we get to interact with.
Yeah, it's a beautiful thing. John, this piece was incredible. If you haven't read it yet, you're listening to this, go read it. We'll link to it in the show notes. If you want to find out anything more we're doing at 1031, you can find us at 1031.vc. And before we wrap up here, is there anything we didn't cover or mention that you think we should get out to the freaks before we wrap up here?
Yeah, the last thing I'll say is just like, I think we all see at 1031, like there's a degree of humility required in being like an investor. Like none of us know like exactly where the space is going to go over the next couple of years. I don't think like, Fedimint we mentioned earlier, like that, as much as you and Matt were kind of on the forefront of kind of speaking that whole project into reality and really marketing it and getting the right people in the right rooms to, bring it forth. None of us necessarily like saw that coming like only a couple of years ago. And there will be things like that in the next couple of years where we're like, things develop in a certain way a lot faster than maybe we expected, or, a new like scaling initiative happens, in terms of like a soft fork or a new layer 2 protocol hits that opens up really interesting new possibilities. Like all of those things are possible. And I think, I guess the sign of a good investor is someone who has like strong convictions weakly held. We have the ability to kind of look at the landscape and see it evolving, and have the humility to know like we can't plot out like exactly the way that everything is going to go. We certainly have some opinions, and I think many of our convictions will be, proven correct over the next like 10 years or so. But what I would say is I'm just really excited to be in a position where we have a unique position to see those changes kind of as they unfold. Like we're on the ground at Bitcoin Park and the Bitcoin Commons, with the founders and the devs and the really intelligent people who are making those changes and pushing things forward and innovating. And so, we have humility, the humility to know that we don't exactly know where everything's going, but I think we are uniquely positioned to kind of be there when those inflection points happen and kind of see the big changes before, almost anyone else who's looking at the space. So, that's what I'd close with.
Yeah. It's perfect to close with, John. It's been a pleasure. We got to do this quite often moving forward. We need to,
yeah, man.
We need to break you out from, we've been hiding John, like in a corner, not in a corner, but like, hey, this guy's got too much alpha. But it's been a pleasure working with you. The way you approach what we're doing at 1031, you're a consummate professional. I think you really accelerate what we're trying to do here. And I feel very fortunate to be able to work side by side with you and meet up in different cities around the country, around the world even, to just go push Bitcoin forward.
Appreciate it, man. Totally agree. Feelings mutual, and there's a lot of work to do. So we're just getting started.
Yeah. That's what we got today, freaks. Peace and love.